People love dividends, and today we're going to be looking at what some of the best dividend ETFs on the market. Whether it's every 1, 3, 6 or 12 months, those extra dividend payments can be a great income and great addition to your portfolio. But what actually is a dividend ETF? Well, instead of buying an individual company, you can buy a dividend ETF, which is one listing. But within that listing, it's a fund which contains a group of companies which pay a great dividend. So this fund is actively managed for you, and their goal is to get you the best dividend possible. So the main reason to get a dividend ETF is diversification. So instead of just being in one company, you split across a range of different investments. But remember, dividends aren't always great. It's great to have a good dividend, but you also need that company growth. While it'd be fantastic to get a 10% dividend, if the company's going down 20% a year, it's not really worth it, and you're still going to be losing money. So the magic formula is to get growth ETFs of companies, plus that good dividend as an added bonus. And that's what we're focusing on today. I've handpicked some of my favorites, and I'm going to go through them, give you some different examples, and explain some key points. And I'm going to compare the dividend ETF to a normal company I hold that pays a great dividend and show you the difference. So make sure you stick around for that at the end. And I'm also going to be showing you which of these companies I'm going to be personally investing in. So if you're not already, make sure you subscribe and smash that like button to let me know that's something you want to see. I do think that UK companies and UK company ETFs are a really good investment at the moment. And the main reason for that is I think UK has got some room to recover, and also UK companies are quite boring. And honestly, across the board, there's just not as much innovation. But while that's bad for growth stocks, it's actually good for dividends. So these huge relic-like companies that have been around for such a long time aren't using the money to reinvest in the company and grow the company, they're paying it out to you as a dividend. So that's why they're offering, in general, a much higher dividend compared to others. That's why there's generally no or very little dividend on these huge tech companies. And it is also important to remember, if you're from the UK, you're going to pay tax on dividends from overseas. So for example, in the US, there's a withholding tax, which is actually 15%, and they take that money off you before they pay you the dividend, which overall, I'm sure you're not really going to notice, but it's worth considering. So I've made sure that all of these companies are accessible to anyone from the UK to buy. They're all available on free trade, and if you haven't got an account already, there's a link down below and you get a free share when you sign up. And as always, this isn't financial advice, this is my personal opinion, and it's up to you whether you follow it or not. So what I'm going to do for you guys is compare them all in a table side by side, and it will hopefully make it as useful as possible, so you can clearly see the differences between the different funds. So with all that being said, let's dive in and take a look at the dividend ETFs. So the first one we're looking at is the SPDR S&P Global Dividend Aristocrats. Now this one aims to track the performance of an American fund, so if you're not from the UK, you can still buy this. Now what's important to note with this one, although it says global, it's not really an accurate representation of a global market. And what do I mean by that? Well, if you take a look at how it's split, there's a big weighting towards the US, followed by the UK, Japan and Canada, which is something you typically will see. So just bear in mind, although it's global, it is generally weighted towards the US. And you'll see the market classification is on developed companies, not so much emerging. Emerging companies tend to be more focused on growth, where developed companies will give you a better dividend. So if we take a look at the top 10 holdings, we can see we've got ExxonMobil, AT&T. So we've got some really big, solid US companies that pay a great dividend. We've got one from Japan, we've got one from Singapore, and one from Spain. So they will be actively managing, swapping and changing these companies to get the best results. So this company gives a dividend yield of 3.4%. Now the average return of the share, which is a return over a 5-year period, has also been 8.35%. which would give you a total of 11.75% return a year, which is fantastic. The dividends are paid out quarterly. Now with the dividends, this quarterly payment isn't 3.4% every quarter, it's that split between 4. So you're going to get a quarter of the total dividend paid every quarter. Their area is focused on global, and the fees are 0.64%, which are really low. Now the next one we're looking at is the S&P UK Dividend Aristocrats. Now that's similar to the last one, but this is focused on the UK. And if we take a look at the geographical breakdown, you can see it's 98.44% weighted towards the UK. And it's all based on developed companies with no emerging at all, which is really what you want when you're looking at these funds. And if we take a look at the top 10 holdings, we've got GlaxoSmith, we've got United Utilities, British American Tobacco, we've got Legal & General. We've just got some really big, solid UK companies that pay a really nice dividend. So if we take a look at the dividend yield for this one, it's 2.81%. The average return over 5 years has been 5.01%, with a total of 7.82%, and that's paid semi-annually, so that's every 6 months. And the focus is on the UK, and the fees 0.65, which again are really low. So that could be a nice option if you're looking for a UK dividend ETF. Now the next one to mention is the iShares UK Dividend ETF, or IUKD. Now this one's quite similar to the last, but it's just arranged a little differently. If we take a look at the breakdown, you can see it's in the UK again. They've got a small focus on emerging markets. And if you look at the top 10 holdings, you can see it's very similar, but Imperial brands are at the top. You've got some National Grid in there, some BP, Rio Tinto, which is a company I really like. So it's very similar. The difference is just it's managed by a different company. So they're trying to achieve the same result, but they're doing it in a slightly different way. The difference with this company is it tries to hold all of the companies within the index, which is reflected in the numbers. So let's take a look at this one. The dividend yield on this one is 3.72%. The average return over 5 years has been much lower than the last one at 2.78%, which brings the total to 6.5%, which shows if you just look at the dividend, and just remember the dividend yield is subject to change, so the dividend yield changes so much because it's the current share price divided by how much they're paying out. So you shouldn't focus just on that number because it's going to change almost on a daily basis. Now that one is paid out quarterly. Again, it focuses on the UK, and the fees again are higher, so they're 0.81%. There's not a huge amount of difference in any of these fees, but it does start to add up when you consider them. So those two are okay options if you want to invest in the UK, but it's not the one that I'm going to be buying, and I'll get onto that one in a minute. Before I do that, let me show you one of the best ones on the list, and that is the ticker symbol VHYL, which is the Vanguard FTSE All World High Dividend Yield ETF. I know a lot of these funds have got fantastically long names, but if you want to check them out, just look at the ticker symbol. Now this one is called FTSE, but it's not really focused on the FTSE, it's just the fact the listing is on the FTSE for you to buy it. It's basically the UK version of American share, and we can see this if we take a look at the geographical breakdown. You'll see it's 40% weighted towards the US, it's got 11% towards Euro, 8% towards Asia, Japan, and then UK. And you can see it's 90% focused on developed and 9% on emerging. Now I don't really like that with the classification. I prefer them to just focus on developed companies because I feel it's much more stable. But of course, those emerging ones can give it more growth in general. And if we take a look at the holdings, you can actually see the top holding here, which is quite unusual, is a Taiwan Semiconductor Manufacturing Co., which is not something you typically see, but they must have a lot of faith within this company. And I'm sure they supply a lot of major brands. Below that, we can see the JP Morgan, we've got Johnson & Johnson, Home Depot, Nestle, Samsung. We've got some huge brands in there that pay a solid dividend. And this one does return some really nice numbers. Now, although the dividend yield is actually the lowest out of all of these ones I'm looking at 2.59%, but the whopping 5-year return is actually averaged at 10%. When we add them together, it brings us in at 12.62%, which is really nice. So this just illustrates why a high dividend always isn't the best option. Sometimes a lower dividend but better growth can work out better in the long run. And this one, again, is paid quarterly and it focuses on a global market. The fees on this are actually the second lowest on the list at 0.38%, which is an added bonus. Although that 0.3 doesn't make a big difference in the grand scheme of things, every penny counts. For the next one on our list, I wanted to mix it up and give you a bit of variety. So you're not just focusing on the US or the UK, this one is the iShares Asia Pacific Dividend. And if we take a look at the geographical breakdown, you can see it's focused on Japan and Asia massively. And it's highly focused on developed companies, which is a really nice factor. Now this is where it gets quite tricky. So if we take a look at the top 10 holdings, a lot of these companies we're not going to be aware of because it's not local to us and it's not really something we would see in mainstream media. I know VTech and I know a couple others on this list, but overall I'm not as familiar with these companies. So with this kind of thing, you are putting your trust in the fund managers. Unless of course you are familiar with these companies. Now the numbers on this one, the dividend yield is 2.73%, the average 5-year return is 5.84%, the total comes to 8.57%, which is a really nice return if you're looking to diversify your portfolio with some shares in Asia. And that's paid out quarterly and the fees are 0.62%, which I would still class as really low. Now let's move on to my favourite on the list, which is the one I'm going to be buying. And this is the HSBC FTSE 100 ETF. Now what's interesting about this fund, it isn't trying to be a dividend ETF. But what do I mean by that? Don't I want a dividend ETF? Well, that's not always the case. You can get some really nice funds that cover a specific market, but they also pay a really good dividend. So let's take a look at the geographical breakdown of this fund. So it's 90% in the UK and the rest is split between the US and the Eurozone. It's highly focused on developed companies, which I really like. If you take a look at the top 10 holdings, they're all really big UK companies. We've got Unilever, HSBC, of course. We've got GlaxoSmith, Rio, British American Tobacco, BP and Shell, which are all really big, good, solid companies. but it's the numbers where this gets really attractive. So this fund has a dividend yield of 3%, which you might not think is so fantastic, but when we take a look at the average 5-year return, the return is a whopping 11.45%, which brings our total returns to 14.45%, which is easily the highest on our list. And in my personal view, I think the UK is a good bet. So I think this fund could easily achieve good growth and a nice dividend, which is a really nice payout for your portfolio. It's paid every 6 months semi-annually, it's focused on the FTSE, and it's actually the lowest fees on our list at 0.3%. So this is a fund that I'm personally going to be buying, and out of all of them on the list, it's the one I would recommend. Now I just want to show you one thing quickly, and this is comparing my best performing company last year, Aviva, with some of these ETFs. Now Aviva are known for paying a fantastic dividend, and last year I made 60% on the company, which compared to all of these blows it out of the water. But let's break down the stats and compare them side by side. So the current dividend yield on Aviva is 5.25%, but when you take a look at the average 5-year returns, although I did fantastic last year, if you look over a 5-year period, it actually comes in at 5.84%, which is actually much lower than some of the others on this list. But it does combined come to 11.09%, and it is paid out every 6 months. So if you compare this to one I just mentioned, the one I mentioned does seem really attractive. And now what this really comes down to is there's time to buy companies and there's time to buy ETFs. If you're really confident in a company and you think there's that room to grow, then a company can be much better. But if you are unsure and want a general coverage of the market and more security, then an ETF is going to be much better for you. And you also need to think about what your portfolio focused on. Are you looking for growth? Are you looking for income? Because generally people who want dividends want income. But like I said, you can combine the two, and also dividends aren't guaranteed. The company can choose not to pay them, so just make sure you bear that in mind. It's not a guaranteed income every year. So by looking at one like the HSBC example I recommended, you're getting that good return, plus the dividend is a bonus, and that's how you should think of a dividend. I hope you guys found that comparison useful and you've got a better understanding of dividend ETFs. And if I've missed one that you really like, let me know down below and I'll take a look. And let me know which ones you're holding. And if you want to join our Facebook group and discuss these, there'll be a link down below, and I'll see you guys in the next video.